Hey everyone, welcome to another video by Optionables. My name is Saket, and today in this video we are going to look at the weekly summary of the markets, our trades and the market outlook for next week. So not just that, we are also going to discuss general economics and the business news related to this particular week. So before moving on, I would like to give a small update about Target. So Target is an automation platform launched by Optionables. So right now we are running the beta version, and mostly by next week we'll be having the first stable version release. So if you're interested to get access to the beta version, you can just drop a mail to support@optionables.in and we'll be sending you the link to access the beta version. With Target, you can simply log into your broker, create a strategy and automate the entire trade in less than 2 minutes absolutely for free. If you haven't checked it out, so do not forget to check that out as well. So next, moving on, there is an event on 23rd, 24th and 25th of this September, that is the Traders Conclave. So here Sujit and I will be taking part. So I'll be one of the speakers and Sujit will be one of the mentors. So both of us will be taking part in this event. So if you're interested, you can also go and check that out as well. So the link is provided in the description. Using the link, you will be getting 10,000 rupees off on the registration. So the registration is 35,000 rupees. Using the link, you will be getting it only for 25,000 rupees. So now let us just discuss about the NDTV case. So surprisingly, without the NDTV promoters, journalists or the management even being aware, Adani ended up owning close to around 29% of NDTV. So the big question is, how is it even possible without any one of them being aware? So this event dates back to 2009 when the promoters of NDTV wanted some money, somewhere around 400 crores. So they end up going to this company called as VCPL to borrow this money what they required. So the thing is, this was an interest-free loan, so they didn't have to pay any interest on the loan, and as a security, they ended up pledging 29% of NDTV shares. So now VCPL has lent money to the promoters of NDTV. In turn, they have 29% of NDTV shares. So these were not equity shares which were directly pledged, rather these were warrants which could be converted into equity shares. So it was not the direct shares, it was just the warrants which could be converted into equity shares. So now what ended up happening is Adani went and purchased this entire VCPL company itself. So even though he didn't directly approach NDTV to purchase the stake, he went and purchased the entire VCPL company. Indirectly, he ended up having the right to convert the entire warrants into 29% equity shares. So that is how, without any of the people in the management or the promoters or the journalists being aware of this, Adani got ownership of 29% of NDTV. On top of that, he also put an open offer to purchase 26% more of NDTV shares from public. The thing is, major institutions who are actually holding the shares of NDTV also hold shares of Adani. So the thing is, there is a speculation going on in the market that there might be chances that these institutions might end up selling shares to Adani, and Adani will end up owning the entire NDTV. So when I say entire, he will have the controlling stake in NDTV. So let's see what will end up happening. So there might be or there might not be a possibility of Adani having more than 50% ownership. So time is going to tell us. So next, let's move on to the global economics, where we had the speech from the Fed chairman. On Friday, we had a speech from Powell, who is the chairman of Fed Reserve. So what ended up happening is the recent quarter inflation data was below the expectation. So they were in US they were expecting somewhere around 9.2%, but it came in somewhere around 8.6 or 8.7%. So the inflation data was below what people were estimating. Based on this data, the markets assumed there might be a halt on rate hike, or slowly the Fed can also start decreasing the rates. So this was the assumption based on the last inflation data, and post which the markets had rallied quite a lot. So the thing is, in the recent speech, Fed chairman made it very clear that he is not going to stop the rate hike. So he still believes that inflation is a concern, and he is going to continue with the rate hike up until 2023. So this was not perceived by the market in a positive way at all, because it was completely against the expectation. So they were expecting some kind of hawkishness, but they never really knew that he was planning to increase the interest rate up until 2023. So right after that, the market started crashing. So Dow Jones, Nasdaq and S&P, everything started crashing. And the thing is, believe it or not, when you actually open 30 minutes candle of these indices, you do see that there is not a single green candle. It is continuous red from the beginning up until the end. The sell-off was extremely severe, especially the tech stocks in US got beaten down close to around 4%. From a previous close. So Nasdaq was down around 4%, and on top of that, even other indices like Dow Jones was almost down 1000 points, and the only thing that could actually stop the fall was the market being closed. So there was so severe sell-off that only if the market actually came to a halt, this sell-off would stop, and US markets closed at the lowest point. So based on this, if you actually go and look at SGX Nifty, that is indicating almost around 220 points negative for a Monday start. So that is not going to be that well in case if we actually end up opening around 220 points negative. So now let's quickly come to the market summary of what exactly ended up happening this week. So this week the markets were completely flat. So on one hand we had the banking sector which outperformed, on the other hand we had IT sector which actually underperformed. So if you look at the top gainers and losers this week, we had Titan and Shree Cements which actually ended up gaining, but on the losing side we had most of the IT companies like Infosys, TCS and Wipro in the top losing list, and all of them ended up losing around 3 to 4% each, and it was quite a bad week for IT stocks. Nifty on the other hand totally ended flat because we had Bank Nifty which ended positive and IT which ended negative, and these two are the top weighing sectors in Nifty. So the thing is, banking sector was also very volatile. Even though it ended positive, it was extremely volatile. So it went below 38,000, somewhere close to around 37,950. From there on, we saw it going to 39,500 and later settling at 39,000. So the week was extremely volatile and it was quite hard to trade in Bank Nifty. So now even if you look at the FII, DII data this entire week, FIIs ended up buying hardly around 500-600 crores, and even DIIs ended up selling somewhere around 500-600 crores. So that means now we'll be quickly moving on and looking at what exactly happened to our trade. So believe it or not, so this was the worst week we have had since maybe from the beginning, because we ended up losing close to around 30 lakh just in this particular week, and if you take from Friday, we have ended up losing 40 lakh in just 6 days. So out of this 40 lakh, around 20 lakh was because of a glitch which I'm going to explain. So remaining 20 lakh is our actual loss, because on one hand we had the futures which were coming down quite a lot, on the other hand we had option trades which didn't go as we planned. So now I'm first going to discuss about the easiest day what we had to trade and the hardest day. So first we'll take a look at the easiest day. So let me just quickly move on to the screen recording where I will show you how the chart of the day was and why exactly we felt it was easy to trade on that day. So coming to the easiest day to trade, it was undoubtedly Tuesday. So we started with a huge gap down below 38,000. From there on, we saw a very good recovery in the market, almost close to around 400 points. Then it again came down around 200 points, took support around 38,200. Then again it respected this support at 38,200, then went up, broke the day's high and consolidated and closed at the highest point of the day. So even though the market seems to look quite volatile right over here, so it was quite easy to trade considering that the market actually started moving higher, it consolidated, respected the support and further went up higher. So we started off with a 38,100 short straddle. So very quickly the C leg stop loss got triggered. So as we started moving higher, the C leg stop loss got triggered. So again around 11:30 we created one more 38,300 short straddle. So the market was consolidating and again slowly started heading upside. So as it started heading upside, even 38,300 CE stop loss got triggered. And once that was done, so the market went up, took support consolidated and closed at the highest point. So while this happened, so the put legs ended up decaying and we got a brilliant decay towards the end from the put legs, and because of this we were able to end with quite good profits. So overall it was quite an easy day to trade, considering that there were no fake down moves. So relatively this week we felt this particular day was easy to trade. So just now we ended up seeing the easiest day. So now let us understand which was the hardest day to trade. So even though we ended up losing the highest amount on Thursday, so Thursday was actually not the hard day to trade, it was actually Friday which was the hardest day to trade. So I am going to explain why exactly it was hard. So even though we didn't end up losing a lot, we just lost around 1 to 1.2 lakh on Friday, and on Thursday we ended up losing around 20 lakh. Still we felt that Friday was much more harder than trading on Thursday. So I'm also going to explain why this is the reason. So coming to the hardest day to trade, so it was Friday. The reason to this is because we opened with a gap up of almost around 200 to 300 points. So you can see that we opened with a huge gap up right over here. And again, we were about to break 39,300, 39,400, but then started the sell off. So as this sell off started, so we slowly broke the day's low, further continued downwards. So anybody who is following technical analysis would have usually shorted additional call options here and would have kept a stop loss here. Generally, when the day's low is broken and the movement continues, usually they end up keeping a stop loss here. So what the market did is it came back up here near this point, it consolidated, again went higher. So while this particular move came, so I particularly thought that we might end up consolidating around this level. But later then what ended up happening, the market consolidated, came down, again consolidated for a while, and again we saw a huge down move, and this down move was almost close to around 150 points, and then we saw a huge up move of close to around 250 points, and again the market ended up falling around 100, 150 points. Especially after 3 o'clock, it became very hard to trade, and even though the market consolidated from 1 o'clock up till 3 o'clock, we never really saw any decay. So on Friday, we didn't end up losing a lot, but it was quite hard to trade because you never really understood what was going on. So whether the market was actually staying in a range or it was trying to find support at the lower levels. So we never really got to know what was going on. So it was quite hard to trade. So we were around 39,200 short straddle initially. We exited everything and came to 39,000 short straddle. So then we were sitting at 39,500 and 38,500 short strangle. So overall, in spite of all of this, we never really got to see any good theta decay where we could end up gaining. So because of all this, and especially the move during the last 15-20 minutes was really hard to gauge, and it became quite difficult to handle such volatility. Even though the maximum loss was seen on a Thursday, so Thursday was actually an easy day to trade. So because of the technical glitch what we faced, we ended up losing. So actually if you look at this, so this was the opening of the day. So the thing is the market went higher, took support at the opening, further went higher, and again took support right over here. And finally, we saw a huge dip. After it broke the day's low, we got to see a continued down move. It was not a down move where it went down, came back up again, and again continued falling. So there was nothing like that. It was a continued down move. So initially, we opened, took support, again took support, and again broke this and continued downwards. So the only issue here was, so our freeze quantity actually got triggered. So we usually use a copy trading software where we punch in one account and the order gets copied to multiple accounts. So usually in the small account, we punch orders in the size of 200 or 300. So what ended up happening that day is we had entered 200, 200, 200 4 times. So totally we had 800 quantity of puts. So whatever order we shoot in that particular account is going to get copied to our account twice. So if we are shooting 200 quantity in a particular account, in our account we are going to get 400 quantity. So similarly, if we are shooting 500 quantity, we are going to get 1000 quantity. So overall, I had entered 800 quantity of puts in the smaller account. So what ended up happening is this 800, while I am entering, I had entered 200, 200, 200 and so on. So while exiting, I tried to exit an entire 800 at once. But Bank Nifty freeze quantity generally comes in at 1200. So you cannot punch in more than 1200 quantity in a particular order. So when you are doing 2 into 800 quantity, it is going to come to 1600. So because of this freeze quantity, entire order got rejected. And the thing is, we had totally almost around 9000 quantity of 300 put option. If this was actually squared off on time, we would have just lost around 2 lakh and it was absolutely nothing. So because we couldn't square this off on time, 39300 and 39200 puts. So we had both puts, 4500 quantity and 4500 quantity each. So these options ended somewhere around 250 rupees and 350 rupees. And we ended up opening our terminal somewhere around 329 and it was too late to do anything, so we hadn't even checked it. So because of this particular manual error, we ended up losing close to around 20 lakh. So the thing is, here the only people to blame is ourselves, because we had to be little more careful while we are doing the copy trade. So in that particular fall, so while the market was falling so violently, so it just skipped my mind that something like this could have actually happened. Even though generally I will be aware whenever we are doing copy trade that there might be a chance of order getting rejected when I shoot over 500 or 600 quantity. But because of the volatility, it just completely skipped my mind. So that's the reason, even though the maximum loss came on Thursday, so the hardest day to trade this week was definitely Friday. So now since we are done with discussing what exactly happened to our trade this week, so now let's take a quick look at the market outlook and a trade idea for next week. If you remember, for the previous week I had suggested 17650 short straddle and also 38,000 and 39,500 short strangle in Bank Nifty. So I had also shared some adjustment ideas and the market outlook. Similarly, even this week I'll be sharing the entire market outlook and also some trade ideas with adjustments in case if something goes wrong, how exactly you can end up adjusting the trade. So now let's quickly move on to the screen recording again, where I'll be discussing about the market outlook for next week and also some trade ideas. So coming to the market outlook, first we'll discuss about Nifty and then we'll go to Bank Nifty. So the thing is, based on how the US markets ended up closing yesterday, so definitely we can expect a huge gap down. So we won't be surprised even if we see 150-200 point gap down, considering that we would be opening somewhere around 17,400 or 17,350. So now if you actually look at this daily chart, so right over here I have just opened daily chart. So around the range of 17,200 specifically, you do find some very good support for the market. So we can see that during the previous week, market has actually taken quite good support around 17,200. And on the higher side, I think it seems to be quite clear where the resistance actually is. So around the range of 18,000. So market has tried to cross this couple of times, but it was not successful and the market has actually come down. So the thing is, if not for a big gap down, maybe I would have still gone with a simple short straddle at 17,650 or 17,700. But given the fact that we are expected to open gap down, so it becomes really important for us to see if we are actually going to hold 17,200 or not. If in case we are unable to hold 17,200 and let's say we start going down, then we can head further down towards 17,000 also. So it is quite hard to take a view or a trade based on the current data, what we know. So tomorrow there might be a chance we might open gap down but completely recover towards the end. There might be a chance where we might open gap down and consolidate, or there might be a chance where we can open gap down and further fall. So while taking a positional view, it becomes quite hard because we don't know how the market is going to continue. So when I actually open the Nifty open interest here, so we do get to see huge amount of call rating. So there are 83 million calls lot of 18,000, 17,800 and 17,700 calls. So given this, it does look like the markets might find resistance at the higher level. So this huge amount of call writing will definitely make markets find some resistance at the higher level, and we can go for a slightly bearish trade or maybe a short strangle which is slightly having a bearish bias. So that might be one of the options. So looking at the chart, maybe we can have a short strangle at 17,700 and 17,000. So we can have a short strangle something like this. So if we are opening with a gap down, so then definitely this will act as a resistance, this will act as a support, and 17,000 will definitely act as a support, as we can see right over here. So we can go with a 17,700 and 17,000 short strangle. And if the market ends up coming towards 17,000 or 17,700, we can quite easily convert this into a short straddle. So the idea is going to be fairly simple. So you can just create a simple short strangle and later convert this into a short straddle if necessary. So now let's quickly come to Bank Nifty. So when we look at the Bank Nifty chart, again it's pretty straightforward. Where exactly is the support? We have a very good support at 38,000. Definitely the level of 39,600 or 39,700 is going to act as a quite good resistance, because even though we have tried multiple times last week, this week, we haven't been successfully able to break 39,600. And on the lower end, so we clearly know why 38,000 is a very good support. So tomorrow again, considering that we'll be opening gap down, we might open around 38,500 or even 38,400 or 38,300. So given this, it becomes really important to see if we are actually able to hold 38,000 or not. If we are unable to hold 38,000, we can expect a further down move till 37,200. In case if we hold 38,000 and consolidate, I do not expect the markets to break 39,500 before this week expiry. So because here we have 1 day less also because of Ganesh Chaturthi, which is coming on Wednesday. So we only have 3 days to expiry, and I particularly do not expect to break 39,500 if we end up holding 38,000. Given this, let's also take a look at the open interest and what it has to suggest. So right over here also, we have a lot of calls compared to puts. Lot of calls at 39,500 and 40,000. So tomorrow, since we might open with a gap down, so it becomes quite hard for us to take a view, because the reason why it becomes hard for us to take a view is let's say we might open around 38,500. You can see that on the downside, we just have room for close to around 500 points. On the upside, there is room for 1,000 points. So because of this, there is going to be some kind of an imbalance, and I personally wouldn't prefer taking any trade in Bank Nifty. So on top of this, Bank Nifty, I might end up taking a trade in case if I see any good opportunity tomorrow. But apart from that, based on the data what we know today, I would avoid taking trades in Bank Nifty. So if we are finding some support and bouncing back, then I would be more than happy to do a bull call spread at 38,000. Let's say we go around 38,000, we do see some kind of a recovery, then I would be more than happy to do a bull call spread. So it really depends on how the market is going to move tomorrow, and accordingly we are going to take some trades. I hope this weekly summary was useful to you. If so, do let us know in the comment section. Hit on the like button, share this video, and also subscribe to Optionables. And before signing off, I would also want to tell you about one more thing. Since we are updating the blog about the market outlook every day, so you can just log into optionables.in/blogs and check out the latest blogs, where we'll be discussing market outlook, what we expect from the market, and how exactly we plan to trade everything out there on the blog. And also in the comment section, you can let us know about any reviews regarding Target. We'll try to improve and include it as soon as possible. So thank you so much for joining us, and see you soon in the next video.